Good afternoon, ladies and gentlemen, and welcome to the TRACKWISE Designs final results presentation for the year ended 31st of December 2019. Before we begin, we would like to submit the following poll. For your information, throughout this presentation, investors will be in listen-only mode. Questions can be submitted at any time using the Q&A tab situated on the right-hand corner of your screen. Simply type in your question for the management to review. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses where it's appropriate to do so. These will be available via your Investor Meet Company dashboard. Finally, I'd like to remind you that this presentation is being recorded. I'd now like to hand over to Philip and Mark from TRACKWISE Designs. Thank you, guys.
Good afternoon, everybody. I hope you can all hear us and see us. My name is Philip Johnston, and this is my colleague Mark Hodgkins, and we're here to present to you today the TRACKWISE 2019 results. So thank you for your attending. This is our first run through with this platform, so hopefully it'll all go smoothly. Anyway, so here we go. So a bit about TRACKWISE. So TRACKWISE is a UK-based manufacturer of specialist products using printed circuit technology. And so the globally unique patented technology we're calling improved harness technology, and we're going to describe a bit more about that. With the recent acquisition of Stevenage Circuits, we now offer over 2 sites a full suite of advanced printed circuits, serving a very wide range of markets and a wide range of customer bases within that market. TRACKWISE itself was formed in 1989, so we just celebrated 30 years. We're a newcomer in comparison with Stevenage Circuits, who are about to celebrate 50 years. We came to the market in 2018. We're based at the headquarters, registered offices here in Tewkesbury in Gloucestershire, and obviously Stevenage Circuits based in Stevenage. We're a little bit north of 100 plus employees across the 2 sites. So going on to the business strategy. So the vision of the business is to build TRACKWISE into the preeminent interconnect partner to the world's leading innovators, with IHT integral to electric vehicles, aerospace and medical. Mark and I will go on to describe these market opportunities and our progress in achieving this vision in a bit more detail in the later slides. So this vision has been and will be based on the sustained and sustainable supply of the supply of radio frequency RF printed circuit boards into the 5G and 5G telecom network infrastructure. This foundation has been significantly broadened and strengthened by the recent acquisition of Stevenage Circuits Limited. Delivering on this vision will drive growth. With the IPO and with the recent fundraise, we continue to grow, to develop our capability and capacity to deliver our IHT, and more broadly to deliver our vision. We'll go on to describe the very large growth opportunities in front of us. Of course, the objective of this strategy is to deliver shareholder value. I remain the largest shareholder, and while you might expect me to say this, I'm very excited about the growth opportunity. And for those of you who are shareholders listening in the audience, thank you for your support. So a little bit about the two divisions. So RF, radio frequency. It was back in about 1985 that a local Gloucestershire company, first approached TRACKWISE to make a 9-foot-long printed circuit board, and these were one of the early GSM 900 base station antennas. So you can see an image here on the slide of a mobile phone tower with long grey cigar-shaped boxes on the top of those, and those are the antennas, our customers' business, that transmit and receive your mobile phone calls or your Facebook status updates. The image on the extreme right is one of our precision-etched copper circuits that we supply to the antenna manufacturer. They build into their antenna and test. And our printed circuit boards are a key part of that antenna performance. It's not just mobile phone infrastructure. The RF division serves customer in multiple different applications: shipborne radar, aircraft guidance radars, debugging devices, high-power CO2 lasers, amongst many others. Up until the IPO, the RF business was the main investor in IHT development. The product is a relatively globalized and relatively commoditized one, but it remains a profitable operation for the business. Whilst there remains a good deal of controversy surrounding 5G equipment, notably Huawei, there is no doubt that the rollout will come, and we expect that this will continue to underpin the RF business. We'll go on to talk about 2019. Obviously, this is the subject of this call. One of the issues that was facing the business was the very protracted T-Mobile Sprint merger in the US. So one of our RF customers, our largest RF customer, is a big supplier into Sprint, and the cessation of infrastructure spend for these two operators whilst their merger talks were ongoing was a big drag on our 2019 RF revenues. We're delighted that the lawyers have had their day in court, and that is now resolved, and we expect business to continue with them. So we currently have some very exciting new opportunities in US telecoms. One of the side products, or one of the further outcomes of the Sprint T-Mobile merger was Dish Networks, and Dish have got a plan to roll out a network across the US, and so clearly that's a very big RF infrastructure spend, which TRACKWISE hope and expect to get a slice of. Part of the rationale for the acquisition of Stevenage Circuits, which we'll come on to in greater detail, was to transfer RF production from Tewkesbury to Stevenage, thereby freeing up capacity at Tewkesbury for IHT production. This transfer is underway, and we'll again talk about that in a bit more detail. So, improved harness technology. So, a flexible printed circuit was developed back in the 1950s, specifically as a weight and space-saving alternative to conventional wire harness. And the proven benefits of using flexible printed circuit to replace wire harness now underpin why this is a multi-billion-dollar worldwide industry. The reason you can get your mobile phone inside your top pocket is that all of the wire harness inside that mobile phone has now been replaced by flex. However, due to supply chain limits, 99% of the world's PCB manufacturers can only make products up to 2 foot in length. These proven benefits, flex PCBs, are only used inside a box or equipment, so inside your mobile phone, inside your laptop, inside an avionics box. What TRACKWISE's manufacturing innovation has done is release the size limit. So now our proposition to the market is length unlimited. So these proven benefits of using flex to replace wire can now be used at fuselage level in an aircraft, at wing level in an aircraft. And as one of the main benefits of flex as a wire harness replacement is the weight saving, 60, 70, 80% of weight, and a modern aircraft contains many hundreds of kilometers of wire. The weight, the energy, the carbon saving potential is clear. Sustainability is a major drive in every industry, and aircraft is by no means an exception. So UK aviation is committed to achieving net zero emissions by 2050, and the electrification of aviation we believe is a major opportunity for IHT. You'll see at the bottom of these slides, this slide TRACKWISE filed its patent in all of the main airframe and manufacturing locations, and you'll see here the progress that's been made in achieving the grant of these patents. We'll talk on the next slide in a bit greater detail with regard to the competition and protection of that IP. The question with regarding competition is twofold. Can we achieve revenue, and can we sustain and grow revenue over time? in reality, no change is the biggest initial competition, particularly for a conservative industry such as aviation. Aircraft have been wired in fundamentally the same manner ever since an electrical subsystem was first put into an aircraft, and the power of the incumbent in an industry such as this is significant. And this is why we believe that the advent of all-electric aviation is an important epoch-making change. So, with regard to printed circuit boards, I've already mentioned that a handful of, the vast majority of global UK PCB manufacturers, including our new colleagues in Stevenage Circuits, can manufacture products only up to 2 foot in length. There's really only a handful on the worldwide basis who can make what we would consider to be very long circuits, only a handful who can make oversized multi-layer circuits, but TRACKWISE's proposition, length unlimited multi-layer printed circuits, is, we believe, unique on a worldwide basis. The longest product that we've made to date, and that is a 50-meter long 3-layer circuit, and you'll see an image of that in the annual report if you're a shareholder. We believe no one else in the world could manufacture such a circuit. So the patent is the public facing of a competitive barrier, but by no means the only one. So since first filing the patent, a great deal of research and development of all aspects of the know-how surrounding these the manufacture of long flex has continued. There's a reasonable chunk of accumulated intangible assets on our balance sheet, and this know-how, the investment that we've made in this know-how, in my opinion, is the key barrier to entry and therefore sustainability. Other technologies do exist, flexible circuits, thank you, and additive layer printing do exist as an alternative. These are strong in some areas, but don't offer the full range of proven benefits that can be provided by the use of flex PCBs. So a little bit about our capability and capacity. Since the IPO, we've invested your money, if you're in from the IPO, in enhancing our capability and capacity to deliver IHT, notably in 3 pieces of key pieces of manufacturing equipment, all delivering an integrated roll-to-roll manufacturing capability. So there's a continuous plating line, the bottom left-hand image here on your slide. Those are roll laser drill routes. The top right-hand one. The latest one is the direct imaging, which is actually not shown here. We've had some issues surrounding that. So the equipment was delivered to us from a French supplier just before the lockdown, and the French engineers were not able to leave France, let alone to come to TRACKWISE to install it. And so we have been, our engineers, my development manager has been heavily involved in the commissioning of the remote commissioning of that, and I'm pleased to say that is now largely complete. So the ultimate aim of this, and the image there on the bottom right-hand corner, is length unlimited. So that length unlimited can either produce, as is shown here, 25-meter long circuit for a very large unmanned aerial vehicle, or smaller length circuits in a very efficient production manner, cost-effective volume production. So I can draw breath, and Mark can talk to you a bit about the 2019 numbers.
Hi. So 2019 was in some ways a very good year for TRACKWISE, but with some disappointments. We increased our IHT revenue by 55% during 2019, which was what we were trying to do, but we came under a lot of pressure in our RF business for 3 principal reasons. The first reason was Brexit, which went on for the whole year, and a number of ups and downs, and we faced a number of European customers who just did not want to do business with us, and that impacted on revenues. As Philip hinted earlier in the presentation, the disagreements around the takeover of T-Mobile and Sprint That caused us some problems. Our Irish customer is a big supplier to Sprint and is therefore a big end customer of our product, and we lost a lot of revenue, nearly 2/3 of that customer's revenue last year, and that was a big hit to our business. And then finally, the US and Sino trade discussions, which inevitably focused on telecoms and Huawei. The response of the Chinese manufacturers was to cut their prices to the extent that some of the things we were quoting on, we could not buy the material for the price that the Chinese competitor would supply it for. So all those three things together combined to bring our revenues for RF down to 2.9 million overall for the company. However, we said at the time of IPO that we thought our margins would improve as we moved from an RF business to being an IHT business, and this has proved to be the case. And so we've been able to improve our gross margin overall, and we expect that to continue as the mix changes between RF and IHT. All that together brought us to an adjusted profit for the year of 258,000 and an adjusted EBITDA of 573. But in accounting terms, we made a loss and a loss per share of 0.32 pence. However, there are other things happened last year. First of all, we invested significantly in our capability and capacity, as Philip has already said, but we also invested significantly in our know-how. And you will see in our balance sheet that that investment last year was significant, and that we had to take a very good look at its value at the year end as demanded by our auditors. I can tell you that we consider the future revenue opportunities from IHT more than cover the investment we've made in that development capital, and therefore no impairment charge has been made in the accounts. In the year, we received a number of inquiries from medical appliance companies, and this has proved to be a second major sector for us in terms of future business. The delayed machine commissioning that Philip referred to has held up supply to those customers, but they have now received their product, and we expect that to be a major driver of growth in the future. If you've read our RNSs, you will have seen that last August we signed a collaboration agreement with GKN Aerospace, and we are hoping that will continue apace with hoped for revenues sometime in 2022, although you can never be sure. And finally, as a consequence of all this investment, we have now completed the capacity and capability to deliver roll-to-roll IHT. At the moment, of course, cash is very, very important for everybody. And at the end of December 2019, we had £567,000 worth of cash, and we had net debt of £300,000, the difference being the asset finance that we have accumulated to fund some of the asset purchases we have made. You will know that in March of this year, we had a placing and raised 5.87 million gross from that placing and 5.2 million net. We used £2 million of that cash raised to acquire Stevenage Circuits, but the previous owners of Stevenage Circuits left £640,000 of cash in the business, so our net cash cost on completion was 1.4 million. As of Monday of this week, we had £3.2 million of cash in the bank, and we have undrawn and unused facilities with HSBC of 600,000, giving us nearly £400,000 worth of £4 million worth of headroom. You won't be surprised to learn that our auditors applied a very stringent stress test to our forecasts to enable us and enable them to be comfortable with our going concern assumptions. They asked us to prepare forecasts to the end of June 2021, which eliminated entirely the revenues that we would receive in July, August and September of this year, and would also require us to reduce all revenue assumptions by 50% for the rest of the accounting period. We did that. We also assumed we would make no cost savings and that we'd get no assistance from the government. And I'm pleased to say that at the end of that stress testing, the auditors were satisfied that we had sufficient cash resources. In actual fact, we expect to have the same amount of cash in the bank in a year's time as we do today. During the year, though, it does show that our cash resources would reduce, but at no time do our cash resources fall below £1 million of headroom. For 2020, just to sum up on some of the things you already know about, you will have seen an RNS in February of this year that announced a significant order from an EV OEM company for £630,000, and we are engaged on supplying that now. We completed the acquisition of Stevenage Circuits in April, 1st of April, and that enabled us to free up the capacity in Ashvale here in Tewkesbury for production of IHT in the future. And we raised an equity of 5.8.7 million, as I've already said. Obviously, we have had some impact from COVID-19. We have continued to operate throughout the period. We have been producing all the way through. All our non-productive staff have been working from home, and it was only the machine operators that were on site. It did impact the installation of the machine, as we've already said, and there was some disruption to normal trading patterns in March. But although the trading is subdued, it's quite resilient, and we've been able to continue right through the period without any redundancies and only a very small number of furloughed staff. We had 4 in total, 2 of which have subsequently left the company. 1 is back at work, and the 4th is still on furlough because he has a relative who needs protection. Let's briefly I want to talk about the numbers that are in the marketplace for this year. Before we bought SCL, we were looking at doing 11 million of turnover. We've brought that back to 9.7 million, principally because post-acquisition, we looked at some of the business that Stevenage does through its Chinese offshore supply division, and we thought some of the margins on that work weren't worth working for, so we have deliberately cancelled those contracts. The benefit of that is we can concentrate on other work, and we've been fortunate enough to win some significant work at Stevenage, which allows us to maintain our profits, even though our revenue numbers will be lower. And of course, to some extent, the increasing amount of IHT in our forecasts compared to RF and other types of PCB mean that our margins will improve anyway. Thank you.
Thanks. So I'll just talk in a bit more detail about some of the IHT opportunities in place. So the bullet point at the bottom, I think, is an interesting one that we like to bring out, which gives an indication of the significant growth in the pipeline of opportunities it being addressed by the company and addressed by IHT across a very wide range of industries and applications. So we've talked a bit about the electric vehicles. That is a very interesting opportunity for the business. It suits flex circuits very nicely. I hope some of you will have seen the announcement by British Volt that they plan to build a gigafactory in, well, they're choosing 2 sites in Wales. Now, the reason that this is so interesting and important is that cell manufacture. So the cell is the individual, what some people rather loosely call batteries, in my opinion. So the cells are made and then they're assembled into modules, and then modules into packs, and the packs what are built into vehicles. Now, due to the weight of cells and modules and packs, there's a strong business imperative that these are built close to vehicle manufacturers. So the opportunity is for TRACKWISE to build its capability from this very good launch that we've got with the first OEM into a much wider scale up opportunity to supplying into the UK manufacture of modules and packs for electric vehicles. Mark has talked a bit about the medical catheter devices, and this is a very, very interesting market sector. So inside a medical catheter, so typically connecting an instrument or a sensor through the long catheter to base electronics outside the patient. And these are currently manufactured using micro wires. And these are very, very fine wires and by all accounts quite a pain to manufacture. So the opportunity exists to allow our customers to improve their manufacturing process by replacing these micro wires by small thin flexes. And there are a very large number of catheters manufactured. There are some very large corporations talking to TRACKWISE, and we feel it's a very good testament to TRACKWISE's capability that we're building. That these US corporations have come from to TRACKWISE for these products. And as Mark has said, we see this as a very very large scale-up opportunity in due course. And the aerospace industry, I think, has clearly been pretty hard hit by the COVID epidemic. So with regard to the suppliers into the industry, this is affecting suppliers into current programs rather than development programs, which is largely where TRACKWISE is. Some of you will have seen the announcement that the French government are putting 13 billion euros into the support of the French aerospace industry, including, most interestingly, in my opinion, a successor to the A320. And this is very big news as far as the European aerospace is concerned. So, as you will know, the Airbus wings are currently Brexit permitting made in the UK and developed in Filton. TRACKWISE and IHT has a direct path into Airbus Filton for wing harnesses, and also via GKN into wing de-icing, and also latterly into air inlet scoop. So some good opportunities. And in amongst the 72 customers and collaborations that we highlight here on the slide, there is a very, very wide range of other applications. So from oil pipeline leak detection, from sewage, from sewer monitoring, from nuclear fusion, or companies making very advanced motor windings using flex PCBs rather than wire windings. And so it's a very interesting spectrum. So, but the next slide really shows that our key scale-up opportunities and targets: electric vehicles, medicals, and civil aviation. And we believe that those are, each one of those segments and alone has offer us very, very good growth opportunities. The electric vehicle opportunity, we said at the IPO, would be the lead one, and indeed that is the case. And again, repeating ourselves, part of the rationale for acquiring Stevenage Circuits was to be able to clear our decks here at TRACKWISE in order to be able to focus on that.
A little bit about the acquisition of Stevenage Circuits Limited. Stevenage Circuits Limited was a family-owned business owned by four brothers. It's a manufacturer of short flex, rigid and flex rigid PCBs. 50 years in existence almost, and very little debt. But a very high level of technical capability and a reasonably large factory, obviously in Stevenage, not surprisingly. The markets they covered are very similar to ours, particularly aerospace and communications, but also medical, oil and gas, and space. Majority of their business is in the UK, whereas the majority of TRACKWISE's business is not in the UK. So that was a good balance. And in the year to September 30th last year, their revenues were 6.5 million, and their adjusted EBITDA was 356,000. And the benefits of buying that business to us, where we thought that there was a very good fit for what we needed at the time. It allows us to move 80%, if not more, of our RF manufacturer from Tewkesbury to Stevenage, which frees up the capacity here for IHT. And if we hadn't been able to do that, we would have taken a lot longer to have the capacity to deliver the expected business that we're going to get next year. So it was a very quick way of getting additional capacity. It partly mitigates a single point failure risk, not all the way, but it partly does that. But it gives us a huge amount of expertise. The employees at Stevenage, some of whom have been there 30 years, have been making short flex all that time. And some of the issues that they get and have dealt with many, many years ago are issues that we're experiencing now as we make long flex. And so they have broadened and deepened our knowledge base, which we think is only to the benefit of the company. And they have got 600 live accounts. Now, 85% of their revenue comes from the top 40 of those accounts, but there's another couple, 200 or 300 accounts that regularly buy from the business. And we've already experienced opportunities to sell IHT product into some of their customers. And we have found opportunities for some of our customers to use their China supply operation. So we expect to get synergies from the amalgamation of our two sales teams, which has already been achieved. And good news for shareholders is that we believe that the acquisition of Stevenage in 2020 will be immediately earnings enhancing. So the integration, you won't be surprised to learn that we had a 100-day plan, and that comes to an end in about a week's time. We're on that plan. The only significant thing that won't be completed on time is the finalisation of the new accounting systems at Stevenage. We're having it so that we can operate both accounting systems from here in Tewkesbury, and the COVID-19 implications have slowed up the delivery of that, but it's on program, and it will be finished not long after the end of the 100-day plan. We inherited a little bit of softness in the sales numbers post-acquisition due to coronavirus, but it is only softness, and there is good evidence to show that Q3 and Q4 will return to the levels of revenues seen previously and to the level we assumed before we bought the business. Completion of the transfer of the RF business is on plan and should be completed by the 30th of September. The sales teams have been integrated, and I've already told you we've had some significant sales wins since acquisition. We carried out a post-acquisition warranty audit, and I'm pleased to be able to say that we anticipated all the problems that we did find. None of them are insurmountable, and there is no additional cost that is not already provided for. We bought the business at a significant discount to net assets, even after allowing for the costs that we will incur just to put some things right within Stevenage Circuits Limited. So finally, onto the outlook.
Which is really a summary. I mean, I think the pandemic has been a stressful time for everyone, and while the UK lockdown appears to be easing, you know, you're reading the paper today and global numbers are firmly on the rise, and I think we all got to realise that significant macro uncertainties remain. So we continue to manage the risks under our control, and principally the health and safety of all our staff. Stevenage Circuits is a good business. Mark has bought it well. We're well underway with our integration plans. To say, I think for the third time, the transfer of RF to Stevenage will improve our operational gearing there and free up manufacturing capacity at Tewkesbury for IHT production, which IPO investments have put us in an excellent position to meet. Our IHT pipeline continues to grow. Aerospace has clearly been hit hard by COVID, but this could yet present an opportunity for TRACKWISE and IHT. EV and medicals are proceeding well. Each one of these on their own is a very significant upside opportunity. RF does remain challenging. We've got some good new opportunities underway in the US, but until the Huawei issue is resolved and 5G rollout gets underway, we are expecting and forecasting low growth. The capabilities that we brought in-house by the acquisition of Stevenage Circuit represent new opportunities for our RF business. So we believe our strategy is a sound one. It has been significantly strengthened by the acquisition of Stevenage Circuits. So thank you.
Thank you very much, Philip. Thank you, Mark. Ladies and gentlemen, please do continue to submit your questions. You can do so using the Q&A tab. That will enable you to ask the company questions where you perhaps need the clarity. Just while the company take a few moments to review the questions that have already been submitted today, I'd like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, will be accessible via your Investor Meet Company dashboard. Before I hand back to Philip and Mark, I'd also like to remind investors that your feedback is important to the company. And immediately after this presentation has ended, you'll be redirected for the opportunity to provide your feedback in order that the company can better understand your views and expectations. Philip, Mark, I know I haven't given you an awful lot of time perhaps to review these questions, but perhaps if I could ask you just to read out the question ahead of giving your response, that would be great. Thank you.
Okay, I'll read out the questions. Jake D has asked, with aviation undergoing significant challenges at present, do you see this speeding up adoption?
So Jake, I think I touched upon this in the presentation. I could possibly be accused as an optimistic entrepreneur, but I certainly do. I mean, I think I think we announced today that Qantas are retiring their old 747s earlier than usual. So I think there's no doubt that it is going to force change. I think the whole issue around clean skies, cleaner aviation, carbon reduction is only going to force adoption, force early adoption. And I think the lightweighting opportunities presented by IHT is a compelling case. As we've said, it's a conservative industry, and these things don't happen overnight. But I think we're well placed. We worked hard at it, and we'll see over the months and years. But yes, I would think your proposition is correct. Your question is correct.
Okay. A question from Nick J. What impact is the growth of the number of private entities in the space market having on us?
None is the short answer, Nick. We are dealing in general with the larger, more established players in the space market, and that is not necessarily by design, but that is just where we've got to. So we're obviously very interested in what's going on in the sort of private sector in space, but as of this point in time, the answer is nil.
Okay, question which I'll answer from Mazin S. What gross margin levels are you targeting for IHT? At the time of the IPO, we indicated that we hope to get gross margins at IHT of 45%. We're not there yet, but there's no doubt that we can get to that sort of level. Whether we can get beyond that, we're not sure yet. We haven't made enough of it to know, but certain products are much easier to make than others. So generally speaking, we think the target that we've sort of hinted at before, 45%, is achievable, and we'll do better if we can. So there's a question from Nick J. Where typically in a potential client's organisation do we sell into?
Yeah, and then I think, can I also roll that into Jake's question? Are you typically being designed in the planning stages of EV? So I think, like all new technology, it is tending to be so it's not on a current bill of materials. So we're not going to go to the purchasing team and say we'd like to sell you some of this. So it tends to be a technical sell. So I'm the CEO, but yet probably fulfill the CTO function, and it tends to be a technical sell. So I think the engineering team is where we start to talk to individuals. And going back to Jake's question, are you typically being designed in at the planning stages? So yes is the answer. Well, we're certainly trying to do that. So because I think the earlier that we are in the definition cycle, the better we would say for our clients and certainly for ourselves. So with our lead EV customer, we have worked extremely hard with them in the development team, the engineering team, over a period, and we would say that our DNA is all over their product. So not in terms of an IPR manner, but in terms of our know-how how to make products. So it's typically an engineering cell, and yes, we'd like to try and be designed in at the planning stages.
Thank you, Philip, and thank you, Mark. I think you've very kindly addressed those questions that have been submitted today. Just finally, I guess an opportunity for you guys just to wrap up before obviously we redirect everybody for the ability to give you feedback.
The only thing I would like to say is I think we signed up to the Mellow event.
Yeah, we'll be at the next Mellow event, which I think is a virtual event in a few weeks' time.
I'm sorry, we probably have that, but I think we're using this platform to try and increase our communication with private investors, and that will be. We've been to a couple of the Senkos's events and would like to try and do that in person. But if it's not in person, it will be through a webinar such as this. So we appreciate your support and aim to try and communicate with you to the best of our ability. So thank you. If you are a shareholder, and welcome if you want to be or will be.
Thank you. Thank you, Philip. Thank you, Mark, and certainly thank you for, I guess, most importantly is, giving investors the ability to be part of your results roadshow, which I think is, pretty important for investors to be able to access you at this particular time. Thank you very much. Could I ask investors not to close the session, as you'll now be automatically redirected for the opportunity to provide feedback. If you access this meeting from the website, from Investor Meet Company, the feedback page will appear. If you accessed it from the email link, then you'll be asked to log in to submit your feedback. But as I say, your views are important to the company, and they'll be very grateful for them. Once again, thank you very much, everybody, for attending. Thank you, Philip and Mark, for your presentation today. That now concludes the presentation. Good afternoon to everybody.
Thank you all.